What?
Where are the bulls in 2024? We gotta every day we go down. 3 days in a row this year. 2 days to end the week last week. What's going on? Is everyone afraid of the jobs number? Wall Street analysts panicking? Gene Munster says Apple should buy Peloton. Man, we got a lot to figure out on Friday. Ivan Feinseth at 8:35. He'll come with his bullish slant. Let's get things started, Aaron. PreMarket.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, the late day swoon continues down 15 and a quarter handles, 47, 14.50, moving in on that 4,700 level. We talked about that with Mark Chaikin yesterday. The buck up a little bit, 28 cents, 102.41. Bonds, they're down almost a point here, 121 and 31 seconds. Crude trying to have an up week, up 90 cents at 73.09. Gold down at 290 at 2,047. Silver in the red by a couple pennies, 23.17. Bitcoin down but not out, down $260 at 44,370. Let's bring in Triple D here. And Triple D, I mean, who like hit the light switch from being bearish, from being bullish to bearish? What's going on?
The New Year's ball drop hit the light switch. And again, if you were surprised and so surprised by the weakness in this market for the first 4 days of the trading year, you definitely were not listening to Pre-Market Prep, because nobody will pat ourselves on the back. Nobody called this better than us. We talked about the weakness in the first couple weeks of January. Highly likely it is exactly, it has worked so well. I'm just in shock that it worked this well, the January effect. The leaders to laggards, laggards to leaders. It's crazy how well it has worked. So with that all being said, the big picture isn't disastrous and the end of the world happening here. I have slowly been buying stocks. So just slowly nibbling in. I actually did go into a little bit more of the IWM that I sold, because remember I sold it on the way up. It's been pulling back. And then I was like looking at it and thinking, you know, I had it for a long time, the IWM, and I was like, it had such a big run from 160 to 200. It felt like in a heartbeat. So I did nibble back into some yesterday. I'll be down on that a little bit here today. A little bit of the IWM, about half back about what I sold. I still have lots of IWM. I never sold the whole position, but I was kind of regretting it. And I'm like, with the Fed is going to be behind this market, it's all a bit different here. So I'm not eternally bearish here. Still have a lot of cash. Still have a lot of cash on the sidelines, but slowly putting that to work. So far this year, I bought Amgen. So far this year, I bought some IWM. I feel like I was trying. Oh, and I did buy another one too. So a small one. And I just stuck this in my kids' RESP, a very small position, but speculative. And it was AeroVironment, AVAV, the drone company. Because I'm like, looking, and I think drones are not going away. And this is like, the kids, you know, this is for his RESP. He's 9 right now. He won't need that money for 10 years when he eventually, or hopefully eventually, goes to school. So that's a 10-year trade. But I always liked the drones. You know, he loves drones too. So he's all into it. So I'm like, you know what? It just kind of makes sense, the drone company for my boy. So, because he likes that. So it's kind of more of his trade because he likes drones. And I was like, I think it's kind of cool if the drone company, if drones eventually continue to get bigger, and I think they will. I think it's kind of, you know, a cool stock. And the valuation's not crazy on this one. It's not cheap, but it's not crazy.
You know what?
Those are the 3 stocks that I've bought in my long-term portfolio, or 2 stocks plus the IWM in my long-term portfolio so far in 2024. Nibbling.
You envision a drone delivering you a Miller Lite.
A little bit of that too. Remember the video that I showed? Let's bring AB in here. AB needs to be in this conversation.
Where's AB?
He's hiding in the background. He's always hiding, that AB guy. Where is he?
How we doing, y'all? Good morning. Happy Friday. Well, I mean, we'll see if it's a happy Friday, I guess, here in about 24 minutes when the jobs numbers come out and
Yes.
how the market reacts to that. Of course, that will be the biggest story of the morning, at least pre-market, is this jobs report that's expected. So it's expected that we're going to add 170,000 jobs in December. Following an initial gain of 199,000 the previous month. Although there's a very wide range of estimates. Some economists are saying 80,000, some are saying 200,000. So people don't really know if they're expecting, a big drop off in jobs this month or to gain. So it could be volatile when this number comes out. Now, do you guys think we're going to be in the good news is good news, or bad news is good news, or bad news is bad news? I don't know what we should be hoping for here.
Man,
I don't know either.
Yeah.
If you were last year, you'd be like, well, you just know good news is good news and bad news is good news. But we're in such a little tizzy here. We'll call this market, that's a good word for it. This 2024, the market's in a little tizzy. Not in full-on disastrous mode by any means, but it's in a tizzy. Are we at this like good news is bad news and bad news is bad news? I don't know, because obviously they want the Fed to continue to lower or talk about, they want them to lower rates in 2024. So if we get a little bit of a hot number here, that's gonna be like, oh no, Powell's
That's it. That's it. I'm the same way, because like I do listen to like other shows and other things, and I hear, well, big bet on the bonds, getting killed, like a big article on it. So, well, that means that we haven't killed inflation. Okay. Well, if everyone's worried about inflation coming back and the Fed's not done, then there's an argument. And then Mohammed Al-Arian comes on 2:30 yesterday when the market is just, just flopping. And he says the bond market is pricing in a deep recession. So
Mohammed has been bearish for a long time. Mohammed has been wrong, because he has been on the bear train for a while. And, I listen to Mohammed and love Mohammed. He's been on this show a couple of times here too. We haven't had him on for a while, but we'll get him back. But, I mean, he has been on the bear train for a while here for good reason. I mean, I've been on the bear train for a long time too. The only reason I got off the bear train was 2 weeks ago when Powell decided that he was going to start, well, not 2 weeks ago, but, we got off the bear train in October because we thought the stocks were oversold. But then, I got off the recession train, I should say, for 2024 when Powell said he was going to start lowering rates without, any data to support it. So that's took me off the recession camp. So I know what Al-Arian's looking at. If you got rates up here long enough, eventually a recession should be imminent. But I just think even if we start to teeter, then the Fed's is going to start lowering rates and it's going to stop us from going into a recession. So I feel like the Fed's behind this market here now, and that's why it's hard to be super bearish.
Well, hold on, Joel. Before we move on from Al-Arian, did you read his tweet, or did you see that in the headline or something? Because I had a different take from reading his tweet. Let me pull it up.
Okay.
Let me pull it up. He said. Here, he said the yield on the 10-year U.S. government bond is currently
evading deeper. All right, I'm wrong.
He said
that's a big one. I said evading, consistent with the economy evading deep recession.
He said is more consistent with the economic outlook unless you believe in a rather deep recession for the U.S. So I think he's saying that, hey, look, the rate's coming back up here to 4%. That's actually showing that the bond market is not pricing in a recession here. I guess the thought process there is that if we are heading to a recession, then the Fed would need to cut rates or would need to keep them lower. But if we're not, then they can keep them around 4%.
Well, that would be bullish then.
Yeah,
that would be bullish.
It sounds like it. I mean, I think that's what my takeaway from this tweet was, unless I misinterpreted it. But
he was bearish for a long time. Maybe he's turned when I turned. Maybe he turned. Maybe I subconsciously.
Maybe he's watching. Maybe he's watching.
He might be watching.
But all right, Joel, you mentioned some other big headlines this morning. I mean, this week has just been all analyst ratings. We've continued to get more. But before we get to the ratings, let's hop back to Peloton, which had the big news yesterday. Closed up 20%. Gene Munster, friend of the show, And Joel, here, let me go ahead and pop your screen back up. Friend of the show suggested that Apple should buy Peloton. We talked about this yesterday when I said, we said Peloton could be a buyout target. You said, we've been hearing this. It's never really happened. Who wants to spend that much on Peloton? But I mean, is this getting a pop from the Gene Munster suggestion?
100%. It popped from 620 last night to 669 on that Gene Munster commentary because that was a bold call. So you can see the big green candle. That was Gene Munster was on Fast Money talking about potentially Peloton getting bought by Apple. He made an argument that he thinks that they're going to buy them. This is just, his thought process. He argued that the stock was trading, I don't know what it was, like 2 times sales or something. I don't know the metrics. I don't follow Peloton closely enough, but the argument sounded pretty strong. So the argument that I made yesterday is that we have heard rumors many of time about Peloton getting bought by somebody. And I don't believe it's going to happen. I'm going to stick with that. Sorry, Gene, going on the opposite side here. I do not believe that anybody is going to buy Peloton, especially Apple. It's not their style. They've never been one. But, who's connected better, over the years to Apple than Gene Munster? So, I mean, obviously when Gene Munster says something, the market is going to listen. So not surprising that this gets a pop. And, stocks, just because, if I said yesterday, I think eventually Peloton's going to go bankrupt. But stocks don't just go straight to bankruptcy. They just don't go straight to zero. And even when they go bankrupt, sometimes they don't go zero. That's why I said it's not a zero, but I do believe eventually it goes bankrupt. And I'll say, if nobody does buy this, if they get bought, great for shareholders here. But I mean, really, let's look where this thing is. It was $170 down to $6. Gets bought out at, he's talking about them getting bought out at 10. I mean, so $3, it's a huge gain if you buy it at $5.50 or $6. But let's give this perspective. And if you showed my tweet, AB, from 2 years ago, because I was trying to give context, and it came out in February of 2022 that Amazon was going to buy Peloton. And that was the tweet I was talking about. And the stock was trading at $40 that day. And I think it went up to even $43 or $44. It popped even more. So it's up 40. I tweeted out that day. I said, if I own Peloton, I would be selling into this Amazon pop because I don't believe anybody is going to buy the stock at this valuation. I had no position on it whatsoever. And obviously, here we are 2 years later, and the stock is at $6. So I was proven correct on that. I don't know if I'm going to be correct here or not. I'm scared to go against Gene because I love Gene Munster. And, he says that it's an eye-opener. I have no position in Peloton. Definitely not shorting it here.
Too. Yeah.
What's that?
Being short of $6.60 stock.
Dangerous to be short $6 stocks, $5 stocks.
Yeah.
They do have a lot of customers. I just think they're burning so much cash that unless a bailout does come, and that's what I tweeted, so you can see my tweet from 2022. I tweeted this last night because I was getting a lot of people giving me heat last night because Gene came on and said it was getting bought, and I said on this show, I don't think anybody's buying it. Gene really threw me under the bus on this one. Love you, Gene.
Well, first of all, he was on Fast Money. He was on Fast Money.
He's on Fast Money talking.
He's usually not on Fast Money.
What's that?
He's not usually.
Yeah. He goes on CNBC. He's been on Fast Money before, too. He's all over the place, Gene Munster. He's popular.
I'll say this.
I wish we had an exclusive on him, Joel, but we don't, unfortunately.
I didn't. No, I know. You know what? The only thing I'll say is that, with all due respect, Gene's made some great calls over the years.
He has.
A lot of different stocks. Okay. But I will say, if there's one category where he's definitely not batting like, baseball average, like 300 or 330, that's in calling takeouts. And
it's hard to call takeouts.
Yeah. I mean, what did he do? Was it Amazon and Kohl's? Remember that? There was a few over the years that he's called, and they haven't come to fruition. Now, maybe he has something with this one. I don't know. I still own the stock. I'd love to sell the stock. I would love for it to get taken over at any price, so the symbol just goes away, and we just don't have to talk about it anymore. I thought we weren't talking about it.
I know. You banned it from the show, and now it shows up the very next day. Well, it's your buddy Gene that made us talk about it.
Excuse me. I'm going to take a break. I'm going to call Gene right now and get him on the phone and get an explanation.
So much heat on this Peloton over the years. Stop talking Peloton. And say Dennis is very upset. Because you threw him under the bus.
Well, let's keep.
That's funny. Though. I love you, Gene. And we're just joking. Obviously, I don't think Gene even knew about our piece yesterday. But it's funny, that I come out, and obviously we're both talking about it too because of the TikTok news. So we're talking yesterday. Peloton popped up the 70 cents on the TikTok news. And I just said, when it's at $5.90 or $6, I'm like, I just don't think it. I think long term it's lower. I don't know short term. I don't know the path to get there, but I think long term it's lower. I don't think it's getting taken out. I may be wrong. I don't know anything.
Yeah, and we did a number of other analyst ratings this morning. This week has really just been chock full of analyst ratings. One that's been an absolute kind of dog, even a dog of all dogs, while everything else was trading up. PayPal. So we had a downgrade on PayPal by BTIG. It was a buy before. They downgraded it to a neutral. PayPal, I mean, at some point you got to think this thing's going to start catching a bid, but right now it seems like yeah, no buyers are coming in at any level. I mean, at what point would I start looking at PayPal for a long here, or should I just ignore it?
I don't know. It's just so, and it's trading what 11, 12 times earnings. It's traded to a multiple that people would not have even fathomed. You almost have to think there's just something else going on here. Like we've talked about competition coming for PayPal over the years. I sold my PayPal a number of years ago because I was worried about Apple coming into there, and then the stock went from 100 to 300, and I was like, why did I sell it at 100 when it went to 300? But I mean, now it's back here at 57. Part of me wants to rebuy the stock that I sold. I mean, we're talking about not far from all-time lows in PayPal. And why do we know that? Because it got spun off from eBay, and I believe it got spun off, I think it was around 35 or 40 bucks. I mean, the stock went to 300. You'd never think it would see 35 or 40 bucks here again. Here it is back at 57. I don't know what it's going to take to turn this around. It needs a vote of confidence. It needs somebody to come out and say, hey, like this is, I'm buying this thing. Like Warren Buffett buying it would be a vote of confidence, but I'm not saying that's going to happen. But it needs somebody like that, like somebody to come in, an activist, another activist, somebody come in and give this thing a vote of confidence. That's what's going to turn the story around, because this stock, there may be no tech stock more hated than PayPal out of the big names. Think about how good of a year it was for tech and how bad of a year it was for PayPal. I would have thought it'd get a January pop. So I've been wrong on this one.
It's just like streaming. I mean, it's just like, you Zelle somebody or you Venmo somebody or, I mean, I'm the only one who carries cash around, but, there's so many different ways to, the payment systems here.
Yeah.
Aaron asked a good question. And if you feel that you missed out on the rally of rallies here from $50 to 64, you're getting halfway back. This is the move. You're coming to halfway back. You're coming into a trio of lows here at the 57.40 area. So if the bulls are going to step up to the plate, and I don't know if it's going to be today or tomorrow, the next couple of days, you got to build a base here. You gotta hold some low. I'm not talking like exactly, like 57.30 low, but even down to 56. I mean, there's support in this area. I'm not sure to get into it, but this is just a test. We see rallies, we see retracements. Dennis, you say nothing goes straight up or straight down, even though the SPOOs are going straight up right now. Dennis, watch your offers there. So let's see what happens. Square, boom. Let's see what's going on in Square. This is wow, 80 to 68. I mean, they just came out. Didn't someone downgrade this yesterday or not? No, we'll see.
It's just been going down. I don't even think it's had any analyst action. They've just been hammering it. This stock started the year at $80. It's 78, 68. I mean, that's a 67 now. It's been
a
pretty
big
hammered.
move.
40 to 80, $60 on Square if he gets back there. But it's a tough one. It wasn't one that was on my shopping list. Like we talked about my shopping list before. Obviously, I chased Amgen a little bit there. I couldn't wait for it.
That's excited. A crazy trade, man. You
don't like me buying Amgen up here.
That keeps me up.
It's not my style to buy all-time highs, but I did. But I mean, I do have a number of stocks on my list. I have Marvell. I had a number of stocks on my list, and I still do. A lot of tech stocks on my list on pullbacks. But I haven't bought any yet because I haven't felt like the pullback's really that deep yet. Like, I mean, we're all complaining and we're all, running for the hills here. I mean, let's give perspective here. I mean, Microsoft's down like 2%. I mean, this isn't really been devastating. CNBC just doesn't know what a down day is like anymore. So they just talk relentless how bad the market's been. Think about how October to December, give this perspective. Microsoft ran from 310 to 380. It's down to 368. We haven't had that much of a sell-off here, folks. Apple's been hit a little bit harder, but it's had two downgrades. The two downgrades doesn't help.
Dennis, I guess before we move on from PayPal, just the one thing from the fundamental side, news side. The Fed did put out like a product that competes with PayPal and Venmo this year called Fed Now, a way for businesses and individuals to transfer money to each other at no cost. I don't know if anyone's actually using that or if that's the reason, but I guess anytime you have a service like that come in that kind of undercuts what they're doing, it could be a problem. But then it's not to pick on you. But we can stay on your shopping list real quick because another stock we talked about yesterday, Palantir, caught a downgrade this morning as well from Jefferies. Jefferies lowered its price target on Palantir from $18 to $13. Now you might love this, Dennis, and say, okay, give me all the downgrades, make the stock go down another, 10, 20%, and I'll get in and buy this.
Yeah.
Or does that, kind of deter you from wanting to own this stock right now?
So I had a number of stocks on my shopping list, and Palantir was there too. And I actually looked at buying this at 16. And then you know what? I was in the Benzinga Pro and looking at the details. You know what the market cap on this thing is?
Low.
Do you know how much this is worth? Yes,
How much?
$35 billion. I had no idea they had a market cap that high. And I'm looking and I'm like, I don't know now. I'm like, so I talked about this, and it seems too much. Its PE is 54 and it's got a market cap of 35 billion. When I originally bought this, and I sold it terribly, because I got concerned, I bought this at like $8, and I basically scratched it out at 8 and talked myself out of it at the end of 2022, which was just obviously the mistake. That market cap was half of this, like 16, 17. It's 35 billion up here. I had no idea it grew, but I guess when $8 stocks double, that's market cap 17 to 35. It just looks such a big sticker. So I was looking at this yesterday and I'm like, I can't do it at this valuation. I'm like 54 times earnings and $35 billion, even though I like the story and I think the AI story is going to be here. And I do think eventually Palantir will get a lift off the AI story. The valuation is just keeping me away from it. So price to sales is 17 times. I mean, we talked about NVIDIA comparatively speaking, and I was saying NVIDIA
much cheaper,
is, but, look, and price to sales on NVIDIA is nuts too because their margins are so high. But, forward P on NVIDIA is like 25. I mean, which isn't even
You know
crazy.
what else might be weighing
I just
on
think
this
I'm just scared that's valuation still too high.
Another shorter term factor here, and I don't want to get into this whole discussion right now about the government shutdown. Will it happen? Will it not happen? But defense. I mean, that's one sector that, for an extended shutdown, and that's where they get all their contracts from. So, there's a lot of implications if the government shuts down. We'll go through that rigmarole again. You're breaking support at $16. So that now it's going to be resistance. So if you're buying this on a dip, then you get a little dip back up to 16. That's going to be resistance, bottom yesterday's range. But why not wait for 15 here? Why not fill the
I think
gap?
if come this far, you might almost even get the 14. But again, and obviously, I put it on my shopping list. I had a number of stocks there, and I just put it on there because I like the story. But then you should always do, so I do the technicals, I do the story, and I look at the fundies. When I sat down and looked at the fundies yesterday, and I sat there for 10 minutes analyzing this, and I'm like, I can't stomach paying $35 billion for this company. It just seems like too much. So that's where I think I've got off the shop, at least the long term. There's going to be a trade here. Will it bounce at 14? Could you do it for a trade? Maybe. Is it oversold in the short term? Maybe. But holy mackerel. This thing, when it was $23, $24 or $22 just back at the end of November, it was trading like a $45-50 billion market cap. I mean, think about what a $45 billion company looks like. We don't even know what Palantir does. I mean, this seems like just too much to pay for it. So sorry, I'm actually out on the Palantir here. So I changed my mind. Not that, I'm like, Jefferies is spooking me here. I actually looked yesterday. I did look yesterday. I never bought it for that simple reason, because I was looking at striking. I thought the market cap was like 7 or 8 billion. I had no idea it was $35 billion. That's a lot of money to pay for this.
For a company that you're really not sure what they do.
You're not really sure what they do. At least Apple, I can look at my phone and say, I know what they do. NVIDIA, I know they're everywhere. So I don't know. I'm hesitant now on the Palantir call. But, there's other stocks too. There's lots, I think a lot of the chip stocks would be on my shopping list. I'm trying to go to it. I've had it, on that shopping list for a while. But I think there's still some opportunities here. But, microchip would probably still be on my shopping list. I sold that at 91 because it had gone a long ways. I mean, if it comes back down to 75, 70, I'll probably rebuy it. Just kind of rebuying some of these stocks that I sold, because I told you at the end of 2022 I was selling some stocks. Stocks just got really overextended. So, maybe rebuilding that a little bit here, because I do think that we're going to not go into a recession if the Fed stays behind us. As long as Powell doesn't come out and say, I regret everything I said, we're raising rates, or if inflation. You know what it would be? If inflation starts to tick higher again, then all bets are off, because that means the Fed's going to have to stay aggressive. So you can't see inflation start to tick higher again.
All right, we're gonna kind of talk about a lot of different things here, but let's just finish up with Apple here and the big tech and Foxconn reporting a 30% drop in revenues. That's a big supplier to Apple. That's not good, right? That's down to $1.21. That's weighing on it. We can look at SWKS. It seems like you always get these things. That's trading flat. But look at what that's done trading with Apple.
Yeah.
Dennis, see, what are the other suppliers you like to trade with
There's
this?
QRVO.
Yeah.
Obviously, you go to the AVGO and Qualcomm are big suppliers here.
Look
They
at
all
it.
move along
Yep,
with
look
it.
how
And if
they've
you
been
look, all
moving.
these charts look somewhat the same. There's like 5 or 6 of them out there. OLED is another one there. Universal Display. So there's a number of Apple suppliers. All these charts look identical. I do pairs trade all these. Apple, we said on yesterday, I thought it had a date with 180. It's apparent it's probably going to see that today. It's 180, 68 cents away. Does it bounce at the 180? I think it could. The old resistance becomes new support. But again, valuation. This is what keeps me out of a few of these stocks. And this is what the prop market has run into. It's run into a valuation problem. Some of these stocks are simply just too expensive.
Yep. And so, thanks, Joel, for bringing us that Foxconn news. Again, not great news for Apple after already catching a couple downgrades. We are now 2 minutes away from the jobs report.
Okay.
I'm going wide on this one.
Just go into go ahead and give the preview again one more time. So last month, we added 199,000 jobs, so nearly 200,000. This month, the expectation is for 170,000, so slightly lower. The unemployment rate is actually expected to tick higher from 3.7% to 3.8%. And U.S. hourly wages are expected to fall, the growth to 0.3%. So I guess, there's if all these numbers come in line with expectations, maybe the market says, hey, okay, now that we're adding less jobs and unemployment's going back up, now, rate cuts are back on the table and they like it. Or maybe they say, oh my God, here's the recession that everyone's been finally warning about and the market sells off. I have no clue. What do you guys, what should we be expecting here?
This market,
I'm scared that good news is bad news and bad news is bad news. I'm scared this market's spooked.
Okay.
So I'm kind of scared on this number here. I'm a little bit nervous.
There's okay. We're gonna go wide. We're gonna go wide here, and I'm gonna say I'm focusing on the upside.
I'm going wide and
at the close at 39.50. We haven't even seen the close. 47.39.50. So a 20 handle pop, and people will be maybe looking to get out at the mark. On the downside, absolutely nothing at 47.11 and a quarter. That is the pre-market low. The main low that I'm looking at, 46.96.50. That was a low when Jerome told us that rates were going to go down like 8 times. Okay, the initial move is lower. Perhaps we got a hot number coming from us, Aaron. We just made a new low, 09.75. Trying to bounce still. I have to say it's a little bit of a hot number here, and they're headed for the hills. What do you got?
We have the unemployment rate is 3.7% versus 3.8% estimated. So that came in line with expectations. Non-farm payrolls, 216,000 versus 170,000 estimates. So blew the number out of the water by 46,000 jobs. I guess, yay. Hey, the U.S. economy keeps on going. No recession in sight.
Oh, goes Frazier. Here we go, folks. Making a new low, a decisive new low. Jerome gave us, I don't know what he gave us a couple of weeks ago. And coincidentally, we are coming up to the low on the day that Jerome Powell told us that he had pivoted, and that low is 46.96.50. Haven't hit that yet. 05 and a quarter. Bears in full control here so far, getting a little bit of a 5-point bounce, but when Triple D says he's scared, well, there's for good reason here. Still trying to catch a bid. No bids in sight. 0475 is the low. Nothing but sellers here. Street leaning the right way into this report. Bonds down $1.50 here. They were down to start with. But we're moving to ticks. Any more details on that number? I mean, we got a little bit of a hit yesterday, right? With the numbers that we got. So
ADP, yeah.
yeah.
I mean, look, I would love, Joel, I would have loved to have seen how this market reacted to a jobs number that came in lower than expected, because I would be curious. I almost do think that it is bad news is bad news and good news is bad news right now, because, I don't think if you're a bull, you can really win if you say, okay, well, the jobs numbers came in way lower than expected. The bears would still be saying, okay, that means the recession's coming. But, right now, yeah, I mean, it's clear the market is just is now might be
Spooked.
kind of spooked and might be pricing in, the potential for higher rates for longer. I mean, that was the call for a lot,
Yeah.
the call for a lot of people. And I think if you're Jerome Powell and the Fed, maybe you're thinking, okay, we don't have to cut just quite yet if you're still seeing the economy add this many jobs over a month-to-month basis. So, while I'm waiting for some more details to come in on
Okay.
that. How are we trading? Is it everything? Is it the Q?
You know what? I'm looking at the stocks here, and they were already trading down. I think a lot. We'll get Triple D here in here in a second. The stocks are kind of leading this way. Like Apple is really not that much lower than it was before the report. Microsoft, we'll take a look at that. That's taken a little bit of a hit, but that had been heading lower anyways. But I just want to go back to the S&P chart here, because this low right here, let me get my my indicator out, because this is definitely noteworthy. This is the low on the day when he came out and said everything was okay, and he pivoted. And we've given all of that move back. And one thing we try and stress on this show is when stocks or futures or tiddlywinks, whatever you're trading, when it goes up quickly through an area, it can come down just as quick. And that's what we have. So the plate is set here for the remainder of the day. Can we hold that low, that 46.9650? So far, we hit 02. We got a little bit of a bounce. Let's go to, oh boy, I messed up all my stocks. Let's take a look at some of the bank stocks here, how they're reacting. This was trading lower. I'm going to make the chart. I mean, they hit it, but they were hitting it before. So a lot of the selling's going on in the futures. Let's look at Palantir, which was already trading lower. So that only dropped another dime off this. So they whooped up on the stocks, or they whooped up on the stocks before the number, and then the futures just kind of took it down. Now we got a little bit of a bounce. We're up 8 or 9 handles. Let's take a look at the TLT. Of course, that's an important indicator for rates. Let me get the 24-hour market up here for the TLT. What did that do? That got hit on this too. So right now, good news is bad news, Aaron.
Yeah, I mean, and it's clear why. I mean, a lot of times it's very confusing when you have a type of reaction where it's like, wait, hold on, this was great news, and the market goes down. But I mean, right now, when part of this rally for the past month and a half, 2 months has been because of this expectation of rate cuts, data like this kind of goes, in the face of that and says, and contradicts that and says, maybe the Fed won't have to cut rates at least in the first quarter of this year, and this and that. So, I would say it's less about I would be less worried about if you're banking in rate cuts. I'd be less worried about the labor data and more concerned with the inflation data, because I think the Fed can overlook the hot labor market if inflation continues to fall. But typically, if the labor market's hot, that means that inflation is going to continue to stick around. And you really want to go into the wage growth numbers is one of the big things the Fed looks at when looking at leading indicators for inflation. So either way, we'll see if the market recovers. I think what do we got the SPY down right now? Still about Is it starting to come back a little bit? Or are we still down?
I mean, we're off the low. The S&Ps are just off their low. They're 4 handles off their low. I mean, you make a very good point here. We were waiting on the jobs data here. Next week, right? On Thursday, you get the CPI. On Friday, you get the PPI. So, if the job market is not cooling off, if people are working, the data next week, I mean, we got to hold in there till next week and see what that data is. But right now, a lot of different things not making sense
The
with the
market
Fed.
is spooked. The
Yeah.
bottom line is the market is spooked right now, and I think you're exactly right, AB. I think this market was going to get hit on this number no matter what. So that's why I said I don't know if we're in this good news is bad news and bad news is bad news. It's completely flipped the script from 2023, which is what we did last January. Let's just say what we did. Everybody was selling every stock on December 31st, and then all of a sudden, come the turn of the calendar, they could not stop buying tech stocks all year. So it flipped the script. So January typically does trade opposite to the way the current year went. That is exactly what we have seen so far. Does it continue? I don't think it's going to continue. I don't think we're going to have this year where we give back everything we did last year. But we're to our point when we're doing our analysis, we're trying to look at buying Apple. I look at 28 times earnings. I look at the economy, who knows, where we're going here. I'm like, what? Why? Why take on that risk? And I'm still getting paid some money. So, I tied up some money at 5.72% for the next year, saying that I don't think it's going to just be a killer year for the markets. I'm more comfortable having a good chunk of cash. Again, I'm using some of the cash to buy some good companies that I think are going to be storied stocks on dips, but it's hard to come in this market at this valuation and just say, let's just go in here and let's just start buying. I think the market needs a corrective phase, and I think that's what we're getting.
I tried to wear my green shirt today to get the bulls back, to get the market green. It's not working yet, but we'll see by the end of the day. Dennis, you mentioned tech stocks. We've got someone hanging out backstage that knows a thing or two about tech stocks.
Oh, good.
My man, Ivan Feinseth, the analyst over at Tigress Financial. Let's go ahead and welcome Ivan on the show. Ivan, how you doing this morning?
Good, and yourself?
I'm doing well. It's good to have you on the show. I'm Aaron. I know we emailed yesterday. It's good to meet you. So how are we feeling about this market right now? I mean, it's not the start of the year that we wanted as tech bulls, which I know you and I both are.
Well, I think that Dennis said it perfectly.
Hold on. We got something going on with your audio. Can you guys hear me okay?
I cannot.
Just muffled.
How about now?
Yep, better.
I agree.
Dennis. No, it keeps coming in and out.
All right. Well, we'll
let's try one more second and then we'll figure out, because you were good and then you weren't good. When you lean forward, you're good. Talk again, Ivan.
How about now? Is this better?
Yeah.
All right, Ivan.
Now you're good.
All right, I got to switch to this mic. So Dennis said it perfectly. I couldn't agree more. No matter what the number was, this whole good news is bad news, that the market's got this premise that the Fed, and you got some firms out there looking for 6 rate cuts this year. I don't think we'll get that. I don't think we need that. We maybe need a couple of rate cuts to just moderate the interest rate pressure. But I think the bullish narrative of a downward, the deflationary trend, recovery in earnings and revenue this year for starting in Q4 of last year, which we'll start to get in the reports over the next few weeks. So I think that there still is a lot of strength to the bullish narrative that lift stocks from the bottom that they made in October of last year to close to new highs at the end of last year will continue. And I think we will see the S&P 500 break above 4,800 sometime by the end of January, February, and then moderately higher. And a lot of the headwinds are going to be tailwinds. And still, the most important thing is jobs. I don't know why the market is fearful of jobs, but you have all of these macro strategies that line up trades to really look for interest rate moves, bond rate moves, stock futures. And when it doesn't happen, they unwind and it causes selling pressure. But there's nothing more powerful to drive the economy than jobs. And as long as the labor market remains strong, and which is part of the Fed's dual mandate. I mean, is to fight inflation, but also is to maintain strong employment. I think that will be great for stocks, and the leadership will continue in the tech sector. And this whole AI phenomenon is the internet in the late 90s. It is going to drive the next generation of tech stock advance, the next generation of tech leadership and the stock market advance.
Before
Sounds
we
like you're
get
buying
into
this dip,
individuals,
Ivan. Sorry. I was
Yes,
trying to steal.
absolutely.
before
I
we get
actually
into
wrote even in the
individual,
background, Joel, I was trying to steal. He didn't look at the Slack. I said, me for the steal. He always yells at me. So this background, we're talking in the Slack on who's going to go next, and they always yell at me because I never look at it. But anyways, I even wrote, I'm coming in for the steal, Joel. But Ivan, I just want to so it sounds like you are buying this dip. You talk about this move in AI. Talk about the stocks that you would be buying, because I'm with you on the AI movement. I do believe AI is where we were in the late 90s, early 90s, maybe even mid 90s, I guess, when the internet. So I think AI is in its infancy here right now. Talk about which stocks you would be buying for the next 3 to 5 years as AI continues to expand.
The hyperscalers like Google Cloud, Google, Amazon, AWS, by Amazon and Microsoft, they are going to be kind of the core platform that provides the service. And then I like the enterprise software companies like MongoDB and Monday.com. And also I like C3 AI. And I'm going to continue to quote, and I believe that Tom Siebel said this, but I give him credit for it, that every company is going to have to be an AI company. Every company is going to, in some way, have to deploy AI in tracking customer behavior, optimizing supply chain, in some way increasing business efficiency and employee efficiency. And then other companies are like Adobe is increasingly incorporating AI capabilities. And again, a graphic designer is not going to lose his job to AI. A graphic designer is going to lose his job to a graphic designer using AI to be more efficient and more creative. So it's going to increase operating efficiency. It's going to increase creativity. It's going to increase productivity. It's going to increase, hopefully, job satisfaction. Yes, there always is one caveat that we've all seen Terminator, so we know what could happen if the machines fear us. But overall, this is going to be the next, gold rush, like the internet was in the 90s and the early 2000s, and just automation electronics was in the 70s, and technology and the computer and the personal computer was in the 80s. This trend is going to continue.
So, Ivan, you got a real interesting stock on here, and a stock that delivered some really bad news yesterday, and that's Mobileye. So, they talk about year-over-year revenue being down 50%. Ivan, tell us what. Yeah,
well,
go ahead. It was a green candle yesterday, hanging at $30. If there's a buy the dip opportunity, give us the fundamentals for Mobileye.
All right. Well, first, Mobileye, it's an emerging technology company. It's the leader in providing cameras that run ADAS systems, automated driver safety systems, such as lane departure warning and correction and crash detection, as well as moving up to eventually full autonomy. So this is a emerging technology company that is the core in what is happening throughout the auto industry and the industry leader in it. But just as we're seeing with car manufacturers, that there is starts and stops with how much of this technology we want to incorporate in the car and how much functionality, and also the automotive production. So, and the pricing of it. So, it's a stock I've liked long before it went public, when it was part of Intel, and then Intel recently IPO'd a portion of it. And I think that this dip, I think that, if they're going to bring down numbers, they're going to bring them a lot with the hope that they can catch up throughout the year. So I think that they threw the kitchen sink in the quarter, and hopefully we've seen the worst and things can gradually improve throughout the year. The company IPO'd at $21. I think it was the high was in the high 40s. and now it's back down here at $30. And this is a
Why
buy
didn't they give
again.
us any? I'm an Intel shareholder. Why didn't they give us any?
Well, you still own 80% of the company within
Well, I
Intel.
guess so. I guess so.
So you get,
Impact on Intel here. Intel, what an amazing run to end the year. Hit a wall there at $50. You looking at a pullback in Intel as well here.
yes,
Pulling back down 37 cents today.
I still like Intel. I think that Pat Gelsinger's plans to create this foundry manufacturing, this processor manufacturing infrastructure is going to be a long-term powerful driver, especially as all the other companies in the world would like to move away from a overly manufacturing base in China. So I think everybody like to move away from China and diversify and come back to the US. And you've seen many chip manufacturers and users like Apple and even Nvidia and Qualcomm have said that they are interested in working with Intel Foundry Services because almost every other chip company is a virtual or a fabless company. They outsource the manufacturing of their processors. Like Apple designs and the M1 chip, the M2 chip, they've had great success in it, but they don't manufacture, they outsource the manufacturing. Their value added is in the design. So I think Intel has a lot of opportunity, plus their own chips and their own the chips they have coming out, AI functionality chips for desktop and laptop PCs all the way to the data center.
AB's on mute. AB, you've never done that before.
That's
This
the
is
first
one.
time.
That's the first one.
First time every time.
Sorry about that, y'all. Ivan, when it's all said and done, do you think Apple will be talking about Apple with the Microsofts of the world as like the leaders in AI? Because right now Apple's been kind of hush quiet about their own AI. But to me, I look at the company and I'm like, there's no way the company with the most cash on hand, the biggest company in the world, is just going to bypass this opportunity.
Not at all. And Apple is about to drop a bombshell on the tech sector. I don't know why people have poo-pooed Vision Pro, but there is this new. So there was the metaverse, Omniverse, these AR, VR headsets. The Vision Pro is a spatial computer that is going to create this next category that will incorporate the metaverse and so many other factors. Is imagine just wearing this device on your head and it'll get smaller and better. I mean, the first Oculus that came out kind of looked like the Iron Man that Tony Stark made in the cave. And then later on, it looks like the red and gold streamlined Iron Man. So we're going to see a huge acceleration of development of functionality in these headsets. I think by the time the Vision hits the market from Apple, it'll be well below the 3,500. They'll have at least two models, let's say the Pro and the regular, and maybe that one doesn't have 12 cameras, it has 6, but the functionality and how this will be used to, again, interact, just entertainment, gaming, technical support. This is going to be a huge wave. It's going to incorporate a lot of AI, especially if you looked at the demonstration they did, the way you could see almost like you're looking at somebody, but you're really looking at a graphic of somebody's eyes as they're looking through this. This is going to incorporate a tremendous amount of AI. You cannot count Apple out in AI. I mean, yeah, I think Siri does need a lot of work, but once she gets some additional AI functionality, that will leap forward big time. And but this Vision Pro is going to create this spatial computing category that everybody else is just waiting to jump in on.
One more thing before we let you go, Ivan. What about the consumer? Obviously people still got jobs. Are they going to still be spending money and traveling? What do you like in that sector?
Well, what drives consumer spending? Jobs. And what were we seeing? Jobs. As long as the consumer is secure and happy in his job, or somewhat so, and has a steady paycheck, they take their money. They do two things with it. They invest save and invest, which goes into the stock market, which is good for the stock market, and they spend, which is good for the economy and the stock market. And travel is just not stopping. I mean, you look at the cruise industry, it continues to be on fire. And it was interesting. I was at a meeting with the CEO of Royal Caribbean last month, and somebody asked him about AI, and he said, a human has not made a pricing decision on their website in over 2 years. So AI has been used for a long time, and it's only going to continue to improve as the speed and functionality and the ability of it continues to get better.
What do you mean they haven't made a pricing decision? It's
I mean,
all
the
No,
computers
he
make
said
them all.
a human hasn't made a
Oh,
pricing
yeah.
decision. So the pricing decisions on their website for the cruises hasn't been controlled by a human in over 2 years. It's been automated. They look at, they're managing the inventory and the demand, and there's all kinds of algorithms. Other companies, let's say, like, how do you think Booking and all these other travel companies do this? They've been using algorithms and AI for a long time.
Yeah, I mean, it's incredible to see how quickly a lot of these companies have started adapting AI, and it's not just the big tech companies, like you said, Ivan. It's all across
And
the board.
here's the other thing that it's been talked about, that this is only going to benefit the big companies, and again, it's going to disadvantage the small companies. And no, it's not. AI is going to be the biggest economic democratizing force that has ever existed, because you can buy AI for as little as $8 a month, $10 a month, $25 a month. The fact that the whole infrastructure to operate AI is on a subscription basis. So companies like MongoDB is a subscription service provider for enterprise software and AI function for database and AI overlays that you can use to analyze the data within your database. Same thing with Monday.com. So, and Salesforce.com. All of these services are sold on a very low entry subscription basis. Also, what's interesting is that C3 AI has kind of shifted from fully subscription to a metered service where you pay for what you use. So again, bringing down the cost of entry to adopt this technology.
Got it. Well, Ivan Feinseth, analyst over at Tigress Financial. Ivan, thanks again for hopping on this morning. Busy Friday between the
Thank you for
jobs
having
report,
me.
the big tech market. Yeah, looking forward to having you back on again in the future.
Happy New Year to everybody.
You as well. All right, guys, that was Ivan Feinseth, the course analyst over there at Tigress Financial. Joel, Dennis, we've got
rally
Dip's
time.
getting bought.
Oh, really?
Yep.
Let's go.
Yep.
Can we pull up the
SB, I'll bring up the spider. Yep. Couldn't quite get. I guess I'm not going to be able to buy the Jerome Powell low 46.96.5. We're coming back. We've got about halfway back on the day. So good news, bad news, but I guess it's the bad news. Buy the dip so far. That was a nice.
I think
nice
you're
dip.
going to continue to see people trying to buy the dip, and I eventually think we are going to be okay. I don't think we're coming back and giving it all back. Like, let's give a perspective. The November rally was insane. Like, it was a huge rally here. We haven't dipped much. That's why, certain stocks like Apple have given back half of the gains, but there's a lot of other stocks that have given back almost nothing. So, I mean, I think you got to look at, what you want, what's on your shopping list, how big the dip has been. But, be aware that, the AI story is going to continue to drive. I think eventually you're going to get a dip bought in most of those AI stocks, but just be aware of how undervalued some other sectors are. And that's what we were talking about. The drug sector has probably never been as cheap as it is. I mean, and there's a reason, like Pfizer's just been an epic disaster. But, I bought Bristol Myers at the end of last year, and I'm like, it's just gotten to a valuation that is just ridiculously low. I mean, we still have an aging population. They still going to need drugs. I mean, be it Bristol Myers is trading 7 times earnings, or 13 times current earnings. They projected out 7 or 8 times forward earnings. I mean, some of these stocks are just really cheap. So, Amgen I paid up for a little bit because I think the story is going to be there. But even at paying up at 15, 16 times earnings, I'm not paying 30 times earnings. So I think you've got to look at opportunities where maybe some of the laggards from 2023 could actually have a pretty good year in 2024. And I think I'd be a buyer at dip on a lot of drug stocks. I mean, Merck, Let's look at Merck just blasting off this year. The forgotten stock that everybody hates now because everybody was in Lilly and that was it. Merck's forward PE is 13. I mean, these stocks have traded with PEs of 20 before. So they've just been, growing earnings and just not getting any love here for so long that some of these valuations have just come in to, pretty cheap levels. So I think there's an opportunity here for some rotation and continued rotation into some sectors that are just unloved and undervalued.
Elon in the chat's asking, good news is good news. Yeah, I guess the traders on Wall Street decided, hey, maybe the U.S. economy adding more jobs isn't a bad thing after all. And I feel like you see this happen a lot whenever the market has a gut, a gut reaction to something and trades lower, that as the day goes on, and it's still too close. I mean, we haven't even opened yet, so it could end up, down 2% today. But I feel like I see this happening a lot throughout the day, where whatever the bad news is, then as the time goes on and people have time to digest it, it's, oh, maybe it's not the end of the world. Maybe it's not as bad as we thought it was right when it happens, and you start to see more buying activity. Of course, like I said, this week it's been all bear, so we'll see if that continues to be the case today. But good to see at least some buying activity, some bulls coming in this morning, even after that initial move to the downside. We did have a couple more ratings to get to that we haven't yet. And Ivan mentioned one, but CCL, Carnival Cruise Lines, got an upgrade. I mean, these stocks have been absolutely rallying the past, 6 months or so. I haven't been in them at all just because I don't love the long-term story of cruises. But now I'm wishing I did get in on these. And have you guys traded Carnival or Norwegian or any of these other cruise lines at all?
I can see an argument to own some of these things on pullbacks, but again, these are luxury items. So you can see like how I've talked about 2024. And I think the larger discretionary purchases may get put on hold. So I'm somewhat concerned to just jump into a Carnival Cruise Lines. I'd rather buy stocks that are more staples or more people aren't going to cut out. I don't want to own automotives in 2024. I do think, even though I know there's some people that tweeted at me yesterday that the auto companies are trying to bring down cheaper financing. They're talking about under 5% financing rates for certain cars, where obviously some of the automotive companies eating some of it just to get you to buy a car. And that's to keep sales up. But I mean, these are very large ticket purchases. The Royal Caribbean Cruise Line CEO was on CNBC yesterday. Couldn't have said it better. He was on Sully's show, and he was just talking about that it's busy. The consumer is still very strong, but he says if the economy starts to weaken, we're well aware that we are a luxury item, and that could equal an issue for us. So like just basically talking that he knows that first thing you cut out when you start to get tough for money is expensive trips and new cars. So I think I'm staying away from this because I still think that the consumer, U.S. consumer, and the Canadian consumer especially, is a little bit more stretched. So I want to stay away from this type of purchases and more into like stuff that they're going to buy, and people still go out for dinner, people still go out and do some stuff. But we're going on a $10,000 cruise. Maybe it's going to start to see a little slowdown there.
Yeah, or buy a new house. So those big ticket items have been a little bit tougher. All right, guys. A lot of y'all in the chat have been asking about my man Money Mitch. I figured it'd be better to just bring him on himself and let you guys talk and let him talk to y'all. So without further ado, let's bring our man Money Mitch on the show. See how he's doing this morning. Mitch, happy Friday.
What's going on, team?
Holy
how we
styles.
doing?
You got all stylish here.
Hey,
how are you, Mitch?
What can I say? There's a reason why my name's Money Mitch, right? Gotta look like it, right? I mean,
nice.
Hey, they always say it. But I did see a lot of people asking what's going on, and so I've come here to kind of inform you about what's going on. Of course, I've always loved everything that I've done here at Benzinga, and I truly feel like I've been able to give back to you guys, which is the reason why I do this, right? So I do want to let you guys know that I am going to be stepping down. It's my decision. I'm going to actually be stepping away from Benzinga to be achieving new career and a new level in my career, right? Like always, when I came to Benzinga, I always saw myself as continuing to the next level. And sometimes that calls for change. And I am changing. I am going to something else, a new project. I'm not going to talk about that, but I did want to go really quickly here and tell you guys, as I stand here today, I can't believe this day really has come to say farewell. it's with a heart both heavy and elated because I'm saying goodbye to something that's truly incredible. You know, I really love you guys as a community and have grown to have a great relationship with many of you guys in the chat today. When I began this career at 29, you know, and this journey on Benzinga, I didn't expect that we'd get to where we got to today, right? Benzinga has become more than a platform. It's become a canvas for where you have passion and finance. I know that Joel and Dennis have done a lot for us in unlocking this for us. So I hope that I was able to also help you guys pay that way forward. This is truly where my dreams became a reality. And now that I'm taking this next step, I don't know where the horizons are, but I can tell you at least that I'm going to continue pushing forward in the financial industry and will continue carrying with me the invaluable lessons that I've learned and the memories that we've shared with you guys out there. So I definitely wanted to thank you all for being a part of this journey here at Benzinga and your continued support for Benzinga. Because at the end of the day, this is a road that I'm choosing to go ahead and take upon. Has nothing to do with what's going on here at Benzinga, but I'm choosing to continue going on my career. So though this chapter may end, the story will continue, of course, and I will remain striving to bring the same level of education and enthusiasm, energy, and also still unlocking the markets for you guys. So I hope that you guys keep up with me. Of course, you guys know my Twitter. If you guys aren't following me already, at MoneyMitchBZ, I'll continue growing and I'll continue watching you guys like I always have. You know, I came to pre-market prep from being in the chat like you guys right now. And I will also probably leave that way too, where you guys will see me from time to time, jumping in the chat, throwing in some stock ideas like always. I love you guys. I thank Dennis and Joel, AB, everyone here at Benzinga for opening the doors to my next move. Because really, it wouldn't have happened if it wasn't for you guys out there. So thank you very much. And we'll continue moving on to the next chapter.
Mitch, I just want to say thank you. You know, from the last couple of years you've been with us here, we've learned a lot from you. You've brought us, you know, different trading ideas on a continuous basis. You've been so professional all the way through this. I mean, you had big shoes to fill when Spencer Israel left us here, and I think you did a very, you know, you did an awesome job with us. We've learned so much from you, and obviously we wish you the best going forward in your next step of your journey. And please do come back to the chat. Pop in there, give us some ideas, because, you know, Money Mitch brought some great ideas, especially through the pandemic when everybody's, you know, panicking in the street. Money Mitch was in there. So, you know, I just want to say thank you, and, you know, we wish you well.
Yeah. And
I just want to say, you know, I mean, Dennis, we got to face reality. No one wants to work with us. I mean,
it's me, Joel. It's me. It's gotta be me.
I know.
It's
Aaron
me.
right now. Aaron's filling out his resume
he's
right
out.
now.
He's out.
He's moving. No, Mitch, you brought a lot to the show over the years. Your creativity with YouTube and the jokes and the stuff that you did, it'd sorely be missed. And Aaron has some big shoes to fill here. So God, thanks for stopping by, and I'm sure we'll be talking to you down the road.
Hey, like we said, right? It's just the closing of a chapter, continuing on, and the stocks will be there. AB will be there. Joel, Dennis, every single day. I'll be watching you guys continue to grow. And everybody in the chat, I wish you the best on your trading journey, continuing to push forward in those skills. Like always, it's all about trying to continue to push forward. And like the chat always says, we're always trying to learn. I'll miss you guys. That's for sure. I already do. And I will continue being out there. If you guys want to follow me, definitely stay with me. Have a good one, team. Take care, guys.
Thanks, Mitch.
All right, guys. Mitch's first appearance as a guest on pre-market prep.
He just got a rally going. It's the Mitch
rally.
rally.
The Money Mitch rally.
the money rally. Well, yeah.
And again, so we didn't know. Like, Mitch was, you know, making some decisions in the background. He took a step back, and that's why we've been trying to address it, but we didn't know he hadn't made any final decisions here yet. So it sounds like he has made his final decision. Obviously, we wish him very well, and we're going to keep up with him. We'll keep up with him on his Twitter handle, and hopefully he does pop in the chat every once in a while. But we look forward to working with you, AB, full-time here now. It looks like you've got the job. So we look forward to, working with you and learning with you and growing with you, AB.
Yeah, I
And
mean,
yelling at you, AB.
And yelling at you. I yell at
come on.
everyone.
Yeah,
Don't
we
take it
do. We do.
offensively. I yell at everyone.
We need maybe we need some therapy or something, Dennis, and do a dual session. Our fifth producer, Aaron Bree. But anyways,
Is he 5? No. Is he 5 or
yeah,
4? We had
no.
Brianna.
Well, Joe Young
Oh
was our
yeah,
first
Mighty
one,
Joe Young.
and then Brianna,
Yep.
right? And
And
then
yep.
Spencer,
Yep.
and then Mitch,
Yep.
and
now
now Aaron.
yeah.
But
So I mean,
hey, but hey,
Look,
you
guys-
know what? Living and learning. That's what we do here on pre-market prep. We got a rally going. We hope we gave you guys some new information. I would say on the upside here, let's look for unchanged. I'd look for, well, you got Microsoft above unchanged. You got UNH, let's get to 39.50. Let's not end the week on the lows. That's my target on the upside. It's only 12 handles away. So that's it. That's it for the day, folks. On Monday, and I looked at this before, our guest on Monday will be, survey says, Rocky Horner will be joining
nice.
us on
Yes.
Monday from Simpler Trading, and she always just give us some great trading ideas. So everyone, thanks for joining us. Well, I won't be here on Monday. I'll be in Houston, bringing home the national championship from my school.
Go Blue.
Go Blue.
good luck with that, Joel. Rooting for Michigan there. Dennis, thanks again for everything this morning and for having me on. We'll be back on Monday, guys. Ran a few minutes long this today, but of course we needed to send our guy Money Mitch off in style. And if you guys have any feedback for me, want to see us do some things differently, want to see us keep doing certain things that we were doing when Mitch was here, feel free to email me, aaronbree@benzinga.com. Happy to incorporate any feedback. All right, guys. Take care. Have a good weekend. We'll be back on Monday with Rocky. Don't miss it, 8 a.m. Eastern.